In this video, I'm going to be talking about recording transactions, and I'm going to be talking about recording them with debits and credits. Now, first of all, there's two places to record transactions in a business. You would record in a journal, and you would record in a ledger. It's the same information. Basically, you would put it in the journal first, and then copy over to the ledger. So you would be using debits and credits to record transactions in the journal, and then whatever you do in the journal, you copy over to the ledger, and that is called posting. So the journal is just a chronological record of transactions, and I'm going to actually teach that in a separate video. We're going to actually learn the ledger first, even though it's second in the process. So a journal is a chronological record of transactions, and you would be doing something called a journal entry in this, which we're going to learn in a different video. And then the ledger, the second spot, a ledger is just a book holding all the accounts. So whatever you do in step number one carries forward to the ledger where all the accounts are set up. The journal is organized by date. It's in chronological order, so whatever happened on a specific day is going to be with other things that happen on that same day. But then the ledger is going to be organized by account. So anything that happens to cash is going to be in the cash ledger. Anything that happens to advertising expense is going to be in the advertising expense ledger. So that's how it's organized. If you want to look at what happened last Thursday, you might look in the journal. If you want to know what happened in cash, you might look at the ledger. So what we're going to focus on today is the ledger, and we're learning the ledger first because it's easier to learn debits and credits in the ledger, because we're going to use an informal ledger called a T account to learn this concept. So a T account is an informal ledger, and it just looks like a T. That's why it's called a T account. Nothing complicated. So you're going to have the name of the account at the top, and then on the left and right side of the T account, you're going to have increases and decreases to an account. So on the left side, you're going to have something called a debit. And on the right side, you're going to have something called a credit. That's all debit and credit is in accounting. Debits on the left, credits on the right. So I'm going to erase this so I can keep making notes. Actually, I may be able to just move this. I adjusted the camera. Hopefully this shows up really well, but I'm just going to continue with this with the T account, debits on the left, credits on the right. A definition of a debit is an entry on the left side of the account. A definition for a credit is an entry on the right side of the account. That's all it is in accounting. So basically, debits and credits represent increases and decreases to accounts. But the issue comes in because some account types you add to them with debits, and then some account types you add to them with credits. So you basically just have to learn the rules to know where to put stuff. So I'm going to write that down. Debits and credits represent increases and decreases to the accounts. But whether something is an increase on the debit side or the credit side depends on the type of account. So I'm just going to draw something that hopefully will help you remember the rules of debits and credits. So if it's an asset, an owner withdrawal, or an expense, your debit side is going to be where you add, and your credit side is going to be where you subtract. So assets, draws or withdrawals, and expenses, we're going to add to them on the debit side. And then everything else has the opposite rule. If it is liability, owner investment or capital, or revenue, you're going to add to those with credits and subtract with debits. And that's it. That's all. If you just memorize these rules, then anytime you see a transaction, you would just look at it, try to figure out what accounts are affected. As long as you know the account type, you'll know whether to debit or credit something. And then remember also that the accounting equation has to equal. Well, your total debits also have to equal your total credits. So not only does your accounting equation have to equal, but your total debits and total credits have to equal in the overall ledger. So basically what that means is if you go back to the accounting equation that we did a couple videos ago, anytime I did something to one spot in the equation, I also had to do something somewhere else. So if I'm adding or subtracting in one place, I have to add and subtract somewhere else in order for that equation to still be in balance. Well, it's the same thing here. If you do a debit to something, you also have to do a credit to something else. So you're always going to have at least one debit and at least one credit because of the double entry system. So I'm just going to put that over here as a reminder, double entry system. So every transaction has at least one debit and at least one credit. And I say at least one debit and at least one credit. You could have more than one debit. You could have more than one credit, as long as your total debits equal your total credits in every transaction. So if you have a debit of $1,000, you would either have to have a credit of $1,000 or a couple of credits that add up to $1,000. So that's how it's going to work. And then also, just for calculating the ending balance, you should also know that debits add together in an account, credits add together in an account, and debits and credits offset each other. So we're also going to be calculating the ending balance after we add and subtract numbers to both sides of the T account. Okay, I'm just going to do a couple of examples. So in the first example, let's say the owner invests $10,000 into the business to get it started. Well, that's going to affect, first of all, capital, because the owner's investing money. So we're going to be adding to the owner's investment. And then that's also going to increase cash. Cash is an asset, so we would be adding to cash. So if we're adding to capital, the rule is that that's a credit. If we're adding to cash, which is an asset, the rule is that's a debit. So we're debiting cash, crediting capital for that transaction. So you would have a cash account and a capital account. The $10,000 would go on the credit side of capital and on the debit side of cash. So there's your debit and your credit. And that's it. That's all you have to do. Okay, let's do another example. Let's say, for example, the business performs a service and they earn revenue and receive cash for that service. So if they're earning revenue, that's going to add to the revenue account, which is a credit. And then receiving cash, the business receives cash, so that's going to add to cash, which is an asset, so that would be a debit. So your T accounts would look like this. You'd have cash and revenue. Revenue, let's say it was $3,000. You would have $3,000 on the credit side of revenue, and then you would have $3,000 on the debit side of cash. Okay, let me do one more example. Let's say they pay rent expense. Let's say they pay $1,000 in rent expense. So that's going to be rent expense and cash. In your cash account, cash T account, you're subtracting from that asset, you're subtracting from cash, so that would go on the credit side of cash. And then for rent expense, anytime the business has an expense, you're adding to the expenses of the business. So when you add to expenses, that goes on the debit side. So you would have $1,000 on the debit side of rent expense. So basically every account, it's debit on the left, credit on the right, but you have to figure out based on the account type whether you're adding or subtracting on the debit side or the credit side. And you're always going to have at least one debit and at least one credit in every transaction. So now we're going to look at calculating the ending balance. So if you have a cash account with some numbers on the left and right side, remember this is an asset. So you're adding to it on the left, debit side, subtracting from it on the credit side. So let's say you have some numbers in here. To get the ending balance, you're going to look at what they have in debits, what they have in credits. Remember, debits add together. So you'd be adding together the 10 and the 5,000. Credits add together. So you would be adding together the 2 and the 8,000. But then debits and credits subtract from each other. So you've got 15,000 on the debit side. If you add those numbers up, you've got 10,000 on the credit side. If you add those two numbers up, well, now you got to look at what is the difference between those two numbers. And if you take 15,000 minus 10,000, that's 5,000 remaining in cash. And to show that balance, you would just draw a line under all of the debits and credits, and then you would put the word BAL for balance, and you would put the ending balance, which is 5,000. Now I'm putting it on the debit side because these debits, this 15,000 was larger than the credits of 10,000. If the credit numbers had been larger, I would have put the balance, the ending balance on the credit side. So keep that in mind. And then another thing you should know is what a normal balance is. This is a definition. A normal balance is the increased side of the account. In other words, your balance is naturally going to fall on that increased side. So it's naturally going to fall wherever the plus is. So if I had a balance over here on the negative side of cash, that would mean I have a negative amount of cash, which normally doesn't happen. Sometimes I guess you can overdraft your checking account and you have negative cash, but most of the time your ending balance of cash is going to be on the plus side. So let's say you had a building. Your debit side is the plus side because this is an asset, and your credit side is the minus side. You're subtracting. You're more than likely going to have a positive number in the building account. If you have a negative balance in the building account, that means you have a negative amount of buildings, which is literally impossible. So you're not going to ever see a balance on that credit side. You might see a transaction on that side if they sell a building, but you're not going to see an ending balance on that negative side. If you do, then there's a mistake somewhere and it has to be fixed. So the balance of the building account is normally going to go on this side. I'm just going to put a number in here, but your balance is normally going to go on the plus side. If you had a balance over here, that would mean, let me just go ahead and fill this in. If you had a balance over here, that would mean something's wrong because you can't have a negative amount of buildings. So the normal balance is going to just fall on that increase side 99.9% of the time. And then also, I just want to mention before I end the video that the T account is the informal ledger, like I said earlier. You can also have a more formal 4-column format ledger, which is going to have a little more detail. It's going to have the balance after each transaction instead of just waiting till you get to the bottom and calculating the balance. So we may do some work in a more formal 4-column format ledger, but for now, we're just going to focus on the T accounts so that you can learn debits and credits. And that's all I wanted to cover in this video. If you have any questions, feel free to comment below, and thank you for watching.